Hi, welcome to this video day, which is all about using simple fundamental analysis to back up your reading of the charts so you can get in on all the biggest and best trends, and more importantly, hold them with confidence and milk them for all they're worth. Now, in terms of big trends, I mean those that can last for 1,000 pips or more. Now, a lot of technical analysts will say, well, you don't need to know the fundamentals. Everything is reflected in price action, so all you have to do is follow it. Now, there's a degree of truth in that. However, the problem that most technical traders have is when they get a profit, okay, and it just says 100 or 150 pips, they'll get very nervous it's going to go away. So even though the chart pattern is looking, let's say, bullish for their view, they'll want to either snatch that profit in or put their stop up so close they'll get taken out by the market noise. Sure, they'll have a small profit, but if they'd have had the confidence to stick with the trend and ride out the minor retracements, they'd have had a huge profit. And I think, if you know the big fundamentals driving the charts, then it makes it easier to hold those long-term trends and not put your stop too close, have the confidence to stick with them. There's an old saying in the Forex markets, which is big fundamentals rule long-term, short-term sentiment rules. It's very true. Big fundamentals in the Forex markets can drive trends for many months on end, but of course you get retracements in between. This is what really catches traders out. And I think if you haven't got much time to trade the markets and you want to catch big trends, just by knowing the big fundamentals will help you spend less time on your trading and still enable you to make big profits. Now, just going to give you a couple of examples of this. Now, we've been short the Australian dollar since 93.50. We're now down at 77. That's since late last year. That is a big profit. Same with the euro. We're short from 127.50. We're now down at around 107 as I make this video. That's another huge profit. Now, the reason we've been able to stick with those two big trends is simply because we know the big fundamentals, and they're clear for anyone to see. I mean, if you take, let's say, the Australian dollar peaked in price just after commodity prices started to plunge. And as soon as commodity prices turn south, the commodity currencies follow. This has been true for decades. And the commodity cycle doesn't last just for a few weeks, up and down. It lasts for many months, many years. So it gives us extra confidence to hold the Australian dollar. We're looking for it to go far lower. We're looking for it to go down to 65. The euro, since late last year, it's been obvious that the ECB would not be raising interest rates and the Fed would be raising before them. And, that is still in place now. It's a big fundamental. The euro has still got more on the downside. It could easily go to par. Now, if you just take these two trades, they are 10, 20% in profit without any leverage. And just by knowing those big fundamentals, just get in the market and hold. Too many traders try and trade the short-term noise, and they end up making nothing from what are major moves. In terms of Euro USD, that has not been a difficult pair to make money out of if you're focusing on the long term. If you're trying to get every twist and turn of the market, you'll have probably made no money. I've just given you two examples, but there's plenty more that you can see where the big fundamentals are driving the charts. They're not turning around quickly, and that's why you're getting big trends. So I think when you're looking at your charts, if you know what the big fundamentals do, not just every news announcement or whatever, the big fundamentals gives you that confidence to hold big trends. Now, in terms of holding big trends, which you can also do if you want to be active, is you can do a very simple technique. I think it's one of the most effective techniques in Forex trading, which is basically when you come in the market, okay, come in at full size and basically look to cover half of your trade as soon as the trend moves in your favour. Okay, so what you do is you cover out half of your position. If it runs on, you're still in the market. If it retraces, you get the opportunity to put your 50% back in at a better price. And I find that technique extremely effective because it allows you to be active in the big trends as well. And you can actually milk more money from them if you do the 50-50 bank correctly. Now that isn't what most Forex traders do. What they'll do is when a trend gets in motion, a big trend, they'll want to pyramid up. What does that mean? That means they have to put their stop closer. They get taken out by the retracements. So I've never seen that as a wise strategy. Now, in terms of Forex trading, I think if most traders focused on the big long-term trends and you just took the time to just read what the big fundamentals are telling them, they will then have that confidence to stick with trends. I think traders are in too much of a hurry to get too much money out of the Forex markets, and it's pretty widely publicised online that the way to make money is to trade shorter term. Well, it isn't. You cannot trade too short term and make money. I'm not saying you can't swing trade trends for a few days or so. You can do that, but most traders are just focused on day trading and scalping. It's just not a way to make money. Pro traders, the ones that make the really big money, focus on longer term trends. Retail traders don't. I think if you actually look at what the great traders do, the really successful traders, you'll come around to the idea that holding the long-term trends is a good idea. And also, it's a great idea to know that, just the big fundamentals that are driving the chart. So, for example, if you haven't made any money in the euro since the back end of last year, then you should consider, trading it longer term than trying to trade it short term. So I'm all in favour of knowing the fundamentals, but always timing off the big levels on the charts. Fundamentals are there to give you that confidence in your trading on a technical basis. And just to read the big fundamentals doesn't take much research at all, and it's research well spent. So thank you very much for watching this short video. Take care. Have a good day.